What's going on, guys? Welcome back to the channel. I hope you guys are well. So markets are crazy. Today was a pretty much consolidation day from the impulsive structure that we saw out of February the 24th. So the question is was that the bottom? And so let's try to answer that question today. So before we dive into the analysis, guys, subscribe to the channel, hit the thumbs up button, and don't forget to subscribe to the channel. Um, what we do here is we're going to review the Elliott wave analysis for the SPY, and we're going to see if potentially February the 24th was our low. Now, based on this interpretation, a 38.2% retracement, which was taken from the low of 2 to the 3, came in at 412.88. If, in fact, ladies and gentlemen, this is the bottom, then we can expect the SPY to rally up north of 500. Look, that is far-fetched. I know you're shaking your head at the moment, but that's what technical analysis, that's what we do, right? We got to forecast, or we got to see the potential, right? Because we also have an alternate scenario where we see for the downside. So just bear with me here, stick through the video so you'll see what the alternate count is. Now, once we resolve whatever's happening here, which we're going to dive down to the 1 hour time frame, then we can determine perhaps if this is going to happen. All right, guys, so if you remember in our previous video, right, the reason why we are favoring this count is because this wave 2 pairs up to this wave 4. All right, and per Elliott wave guidelines, wave corrections of the same degree tend towards equality in time and magnitude. And so this wave 2, it took this wave 4 took almost the same time as wave 2 in completion and in its magnitude. So it's pairing up quite nicely together. And that gives me a little bit of confidence that we may see the potential to the upside. Okay, we may conclude that the wave 4 has already bottomed. Okay, so, but not only that, we also have several levels of confluence between fib ratios that we're going to review right now. So let's dive down to the 1 hour time frame and let's take a look at those ratios. Okay, so this wave 3, okay, completed here on January the 4th. And since January the 4th, we've been looking at this corrective structure. All right, and it's been a little bit tricky to dissect. I'm not gonna lie, it's been tricky to track, but we've been diligent and we've been agile and as traders, and we've been patient on the sidelines. So, the trend line here that you see here, this resistance trend line, originated at the high here of January. Okay, and then we got the wave A. Then this trend line was confirmed as resistance back here on the 12th, and then we got the sell-off, all right, to complete the W wave. Then 3 waves up into the X, where this trend line again became resistance. Then we sold off to the A, B again resistance, and then C to the potential bottom. Okay, so now what were those confluences that we were looking for, or that we were talking about? So if you remember from the daily time frame, this yellow degree, which is the primary degree, okay, in the wave 4, that's the 38.2% retracement. Now the green count here that you see, okay, this complex correction, the W, X, and Y, it's the intermediate wave degree. So that intermediate wave degree is this fib ratio here that it came in at the 78.6 retracement. I know it's a little bit blurry to see, or there you go, 78.6%, okay, and that is taken from W to the X to find the Y. Now normally we see a equality, right, of W and Y, but in this case it's valid because we broke below the W. All right, now not only that, that's already 2 levels of confluence, right, of the lesser degrees. Now in the minor degree, we have the 1618, okay, of A versus B to complete the C wave. Now these 3 zones are really damn near close to each other to let us know that this was a strong area of support. Okay, now what we're looking at here, guys, is that we were looking from the February 24th low. We can count 5 waves. All right, let's dive down here and let's take a look. The 15-minute time frame will let us know, right? So 1, 2, let's actually draw it together. So 1, 2, 3, 4, and 5. So we got the wave 1. So A, B, C. So potentially the wave 2 has completed at the 38.2% retracement. Now, if this is an impulsive structure, this is where we will likely find a support zone and then take off. Now, is it likely that's the case? I mean, yes, it is probable, right? I mean, I am anticipating further upside, but for now, because of the alternate count that we have, and because we were just hovering underneath this resistance area, we didn't quite kept on going, right? So that leads us to our alternate count, in that our alternate count is suggesting that we still see further downside. So Going back to the 1 hour time frame, this count here will suggest that instead of heading on higher, right? So our wave structure here on the wave on the our third wave of the primary degree still ended on January the 4th, but we're still in the ABC corrective move. All right, and instead of the 38.2% retracement, which is the January the 4th, February the 23rd, 24th low, we will see perhaps the 50%, just like this. Okay, so likely, if this is the case, then we can see the SPY heading on lower towards 391, sub 400. Okay, so let's go back down to the 1 hour time frame and let's take a look. So even though wave 4 broke above the origin or the end of wave 1, this is still valid in the sense that we are doing an expanding volatility triangle. Okay, these triangles form towards the end of the cycle, so it forms in the wave 5 and wave C. So it's valid from an Elliott wave standpoint. As you can see here, we have confirmed this trend line resistance and we have confirmed this trend line support. Okay, so it's a really nicely formed triangle at the moment. Now, what we need to do, guys, is that we cannot continue on lower. All right, we cannot continue on lower beyond the 786. Okay, so where's the 786 retracement? 786 retracement comes in at, here we go. Oops, that's not it. So the 786, I mean, we still have ways to go, but our first warning sign comes in at the 618 and then the 786. Okay, so if price action by any chance or by any means coming this week or the next continues on lower and we cannot hold any of these two levels, then it is likely that this is the wave structure, right? Because as you can see, right, guys, you know, if you've been following the channel, we've been tracking wave 2 pullbacks, right? When we thought that perhaps this was the low, right? This wave 2 wasn't it, right? Or this was, because before we were doing this, right? If you guys remember, this was 1, 2, 3, 4, and 5 to the 1, and we're counting this as 2, but then it so happened that wave 2 or the potential wave 2 at that time kept on heading on lower. So we see a lot of fake outs. We see a lot of continuation to the downside, pressuring the continuation to more selling. Okay, so I'm nibbling here and there at trades. Okay, but we're still holding some trades that are protecting us to the downside. So again, if we start breaking below, let me do this again for you guys. If we start breaking below anything between 420 and 416, then it is likely that we are still in a corrective wave 4. So we'll be in the 1, 2, 3, 4, and 5. Okay, and then obviously support down below. Okay, so over to the Qs. In our preferred count, okay, our preferred count is just like in the SPY. Okay, we completed the wave 4 here on February the 24th. This is looking a little bit better than the SPY. 1, 2, 3, 4, 5, A, B, C to the 2, and then to the 3 we go. All right, so but we still got to look for the 336. I like to see that price action come down to the zone. Okay, anywhere between these two areas here, I'm a buyer. Okay, so I'm waiting until tomorrow. I'm waiting after Powell speaks, excuse me, to determine whether or not we see for the price action to the upside. Alternatively, just like in the SPY, this is also an expanding triangle to the downside. So 1, 2, 3, 4, and then final fifth to the C to the 4, down towards 100%, 305 or 322. Okay, I wanted to show you guys a chart of oil, and just because oil has been going really nuts right now, and this chart suggests the following. So over to, let's take a look at the 4-hour time frame. So from the December lows of 2021, all right, we see this impulsive structure in the wave 1, ABC to the 2, 1, 2, 3, 4 to the 5 to complete the third. Now we see continuation to the upside. Oil just actually made a new high to the $1 to 110 or 107. I think 107. That's U.S. oil. What about crude? So crude, yeah, oil still at 105, sub 110. So I do apologize because I said 110 at the beginning of the video. So 1, 2, 1, 2, 3, 4, 5, 3, 4, and now we're looking for the fifth. Now this fifth wave can go anywhere between 1 to 4, which we already surpassed, to the 114 to the 116, even to the 125, which I know there are some targets out there that I saw this afternoon in an article. So this 786 represents a extension from the 2 to the 3 down to the 4, okay? And then we get the 125. Now, I don't know if it's going to be a straight shot there, but likely we'll see a pullback coming into tomorrow, and then, we go. All right, guys, let's take a quick look at Bitcoin. Also, Bitcoin has been rallying. And if you guys remember, I presented this count a couple of months back, and this count is suggesting that Bitcoin is in a triangle, okay? And this triangle is suggesting that we see price action come up towards the 50K to the 56, anywhere between the 50% and 61.8% of wave A versus wave C to the D, okay, at which point we may see resistance and then come down to the E. As long as we keep on making higher lows and lower highs and not break below the wave A at 29 or 30,000, then this is likely the case, okay, and then we see a breakout. Okay, guys, so that's it for me tonight. I hope that this was helpful to you guys. Let me know if you have any questions down in the comments below, and love to interact with you guys. Take care. I'll see you guys tomorrow. Bye.